He's always early to the party. Well, Isaiah, thanks so much for that social roundabout. Definitely some interesting stories, and we're going to continue the interesting stories next with Alan Adler when we talk about what's going on with Nikola. Alan, thanks so much for joining us this morning.
Just my take on the last segment is the emoji works just fine. Okay, I'm good with you. I'm good with the emoji.
I'm with you. I don't think I'll be investing in this, so I'm with you. I think the emoji does the job.
Yeah. And they missed it. They missed it by 2 weeks. It's a Valentine's Day thing, right? Anyway, all right. So, guys, we always talk about Nikola. We have to keep talking about Nikola because I keep writing about it. But really, what's going on now is they took a little umbrage, quite honestly. We didn't have to make a change or anything. They took umbrage to the idea that they might run out of money in 12 months. And they might, or they might not. But so on Saturday, I did an interview with Kim Brady, who's the chief financial officer at Nikola. And Kim wanted to make sure that I understood that they see their liquidity position, that is how much access they have to the capital markets as well as cash, as being about the same as it was at the end of 2021. The numbers do line up in a certain way. However, the company has less cash in that number. They've got about $943 million of total liquidity at the end of 2022. Of that, about $323 million is in cash. The rest is opportunity to sell equity, that is, to sell shares into the market. And they've got like 3 devices to do that. The interesting thing, and the thing that I think is causing them some angst, is that their auditors told them you can't count these other things besides your cash in terms of having sure access to it this year. The stock is a little over $2 a share. A number of analysts have downgraded the stock in terms of its price and that kind of thing. And all of this is juxtaposed by what looks like a growing business. And I think it is a growing business. They're adding partnerships, both in terms of making hydrogen and also, autonomy, a number of things. They've just continued to make news with new partnerships. But their financial condition is difficult, I guess is the best way to put it. And so when we wrote about the 10K, that's the filing that they have to do at the end of the year, saying that they had a notice of going concern, that seemed like a pretty big deal. And it is a pretty big deal. But Nikola would argue that that's just accounting language, and it's really not something that's affecting their day-to-day business. They do expect to cut expenses about 25% this year. They've got the plant in Arizona up for sale so they can lease it back, raise some cash that way. They've already done that with their headquarters in Phoenix. So, I mean, they're doing everything they can to keep things moving. There's a gap, though, between where we are today and where they ultimately could get to if everything works right. So, we just continue to keep an eye on the company and report what we see. And of course, when they're willing to talk about it as they were on Saturday, then we want to report that too.
Yeah, I mean, when you start looking at companies, I mean, in this situation especially, right? I mean, you're dealing with, it feels like they've been in the news for almost all the wrong reasons, right? I mean, between their founder, Trevor Milton, there on trial. I mean, how much does that play a factor into, like, say, a public market, just like the perception? Because, like you said, their auditors came back and said, hey, you can't count this as liquidity because you have to have ultimately you have to have a buyer if you have to go into the public market. So, like, does that, I mean, even though they're basically disassociated with them, like, does that play an impact there when they're trying to raise capital?
Tony, I think we can pretty much put Trevor Milton in the rearview mirror for Nikola. I really do. I think, we have his sentencing coming up, for fraud charges in June, and that will, cast a bit of a shadow on Nikola. But I think they moved beyond Trevor for the most part. He fought them, interestingly enough, in trying to authorize more shares so that they could have these commitments. And these are committed facilities, if you will, that they can actually go into. But the problem is that when you go in and you use a lot of shares to raise money at $2 a share or $2.20 a share as they closed on Friday, it's going to be very, very expensive. It does cause dilution to current shareholders. And so, that is sending a signal to the market that, well, maybe we don't really want to do this right now. We don't see them necessarily failing, but we don't see them in healthy financial shape. And that is not really entirely their fault. They're not doing anything wrong. Now, they did purchase their battery supplier last year. Financially, that's a bit of a setback because Romeo Power was basically discounting the stuff they were selling Nikola. Nikola saw that and now has to make up about $110,000 for every battery pack that they make, having acquired Romeo, because that discount was, not really real, I suppose. And so they're working to, bring down cost and localize. We had Michael Loscheller, the CEO of Nikola, on Global Supply Chain Week last week, and he was explaining that bringing things in-house and vertically integrating, and as they're doing with both fuel cell modules for the truck that's coming in the fourth quarter and their battery packs, which are on the road now, is a way for them to control their costs better. And that certainly does make some sense, because the idea of having to get materials and bring them in from around the world and so forth. So you've really got two stories here. You've got the financial story, which, we've spent the last few days talking about, coming off of pretty disappointing fourth quarter results. To expect them to be earning money would be unrealistic anyway, but the loss was greater. The cost of sales were greater. There were things that just, the costs are very high. And so you've got to get through this period. And Kim Brady, the CFO, is, basically comfortable. He feels they're in better shape than they were a year ago financially. I don't know, not being an accountant, I don't know if I could opine on that, but I see plenty of things like having less cash in the bank that is difficult. So let's see what happens over there. But they do have a lot of very positive things. They're leading in terms of, I would argue, with electric vehicles, they're not number one, but they've got, more than 100 of those vehicles built, not as many in public use. But just over the weekend, Nissan put out a picture of a Nikola Tre Bev, hauling cars for for Nissan. So, you're seeing the, positives pop up, kind of shoots, if you will, green shoots. And yet you've got this kind of underlying financial situation that is, uncomfortable, I guess.
And Alan, one of the big things, of course, with these companies that we've seen in the past is that they've always stayed resilient when it comes to R&D and funding that, with the financials changing a little bit for Nikola going into 2023. And I know you said a lot of things are staying on course, but do we start to see potentially a little bit less innovation, a little bit less push towards R&D or some of that innovation side? Or do you think the plans that they already have in place are going to just continue as they are?
Well, I think the R&D spend specifically, Anthony, probably can drop a little bit because they're getting very close now. They're at the beta builds, and they'll go to gamma next on the fuel cell truck. So the innovation piece, obviously, if you're going to cut everywhere, you're going to save some money bringing, as I mentioned a moment ago, bringing things in-house to do them there. They're talking about 25% less spending this year. They spent $805 million last year, and all in, SG&A and R&D and everything like that. This year, they're talking about spending $600 million. In both cases, they don't have the cash to cover that. So that means they have to go to the equity markets. I don't know about R&D itself, if there's really going to be quite as heavy a need. I think right now the idea is let's get to production. Let's get some trucks that we can sell. Let's generate some revenue. One thing that Kim did tell me was that, the cost of manufacturing a fuel cell truck is actually going to be less than the battery electric truck, which is interesting because at the customer side, there's a lot of incentives out there, financial incentives from California and from the Federal Inflation Reduction Act, that will carve a lot of cost out of acquiring one of those trucks. So if you get the truck and you get a hydrogen business going, and they have green shoots of that happening with both a hydrogen hub in Buckeye, Arizona, that's, getting started. And then, the fourth station agreement, fueling station agreement last week, was announced in California. So, they're on their way, they say, to 60 stations by 2026. That's all going to be done with partnerships. Nikola will own a handful of stations, but not a lot of them. They're very expensive, by the way. Probably 17 million was the one number we saw a few years ago, a piece for a station. So it's an expensive undertaking, but it could be very, very lucrative if, in fact, they can have a truck, a fuel cell truck, and the hydrogen for it. They might attract down the road some more interest in financial partners and that kind of thing. But they've got to get from here to there for that to happen.
Yeah, I think that was one of the questions I was going to follow up with. I mean, we saw, I know this goes back to almost the original business model was to kind of own the infrastructure around the hydrogen stations and things like that. I mean, we've heard it, and I think you've talked about it before, where that they may be looking for suitors to kind of spin off that business, sell it to somebody, that hydrogen business. I mean, is that still a possibility as we move forward, especially with in a situation where their cash position isn't maybe as strong as it was, say, the end of 2021?
So that's a question, Tony, that I asked on Saturday, and Kim Brady said no, because there is no hydrogen business. And he says you've got to have the truck and the hydrogen to make it work. They will partner and they will invest as little as possible of their own money in these stations and in the hydrogen production. And, the partners will be there for that. The question is, when can you start to generate meaningful revenue from that? If you just look at Cummins, for example, which we talk about them a lot too, they're looking at $400 million in revenue from making hydrogen by 2025. And that's because they make and sell electrolyzers that, one of the ways to make hydrogen is through an electrolyzer. So the idea being that, they're looking at it more from a manufacturing perspective. I don't know that they'll be as much of a hydrogen seller as Nikola wants to be. But you've got to get people that are, that are viable partners that can come in and do this. And I think that there are plenty of big oil companies. BP is one of them, and that was the original talked about partner for Nikola back before the Hindenburg report in 2020 that kind of really smacked the company hard. But BP is still out there. In fact, the man who runs the energy business at Nikola is a former BP guy, and there are a lot of BP guys on staff at Nikola.
Definitely, it's going to be something that we want to watch closely. And Alan, thanks so much for joining us this morning. We're definitely going to have to keep up with you, and for sure take a look at your Truck Tech episode coming out on Wednesday.
Yeah, that's going to be Alex Rodriguez from Embark Trucks. Looking forward to having Alex with us. Embark being, one of the startups in the autonomous trucking space, made some interesting moves recently with providing a truck over to Night Swift with their technology in it. So we'll catch up with Alex. It'll be good to see him.
Awesome, Alan. Looking forward to that episode. Thanks so much for joining us this morning.
Thank you, guys.
Right now, we're going to take a short break, but we'll be right back with more Freightwaves Now.